A common consideration for middle-class individuals is investing in real estate, with the idea of buying a property or selling it later for a profit. However, the concept of mutual funds or stock market investments often appears distant and intimidating due to a lack of information and many associated myths. Today, I'll attempt to dispel some of these misconceptions. Regularly investing in stocks every month is known as SIP, or Systematic Investment Plan, which exemplifies disciplined investing. With SIP, you need not to worry about managing it every month. Once you initiate your SIP, a predetermined amount will be automatically deducted from your bank account and invested in the mutual fund of your choice. Whether you opt to invest $500 or $50,000, the specified amount will be systematically invested in the selected mutual fund each month. What are the advantages of SIP? Firstly, it requires a low initial investment. You can commence investing with as little as 500 rupees, which won't burden your finances significantly and still allows for disciplined investment. Secondly, SIP employs rupee cost averaging, which minimizes the impact of market volatility, potentially leading to higher returns on your investment. Thirdly, SIP is a flexible investment. For instance, if you've been investing 5,000 rupees for the past few months but can't do so this month for some reason, you can pause it for a short or a long period or increase or decrease the amount, all without incurring extra fees. If you decide to discontinue it, you can do so after completing the minimum investment period, even if your account lacks sufficient funds for an SIP installment. The bank may charge a minor additional fee of approximately 5 or 10 rupees for SIP bounce. The longer you invest, the greater your potential profits become. When is SIP the right choice for you? SIP or Systematic Investment Plan can be an excellent choice if you have a steady source of income or expect a fixed amount to come into your account monthly, allowing you to invest a portion of it, X amount. Even if your income is modest, you can start with a small investment. There's no need to wait until you're earning a substantial amount, like $80,000, before thinking about investments. When to get started? Because SIP allows you to begin with a small amount, you can start investing whenever it suits you, based on your convenience and for any desired duration. However, there is an important factor to consider, known as the expense ratio. If you're handling your investments independently, have conducted your own research, and decided where and how much to invest without expert assistance, you're operating under a direct plan. In this plan, you interact directly with the asset management company, AMC, and the expense ratio is typically lower. Conversely, in a regular plan where a fund manager oversees your funds, their fees or commissions are factored into the expense ratio. Lump sum is a term associated with SIP but represents the opposite approach. In this method, you accumulate a specific amount, like a bonus or savings, and invest the entire sum at once in a mutual fund. The advantage of this approach is its convenience. Once you receive the funds, you can invest the entire amount at once, without monthly deductions. However, there are both positive and negative aspects to consider. On the positive side, it removes concerns about timing the market. For instance, if you invested $10,000 in November 2019, but during the COVID-19 period, the subsequent market downturn, the value of your shares dropped by 20% and you needed funds, you might have to sell the shares at a lower value, say $8,000. Conversely, the market could also have moved in the opposite direction, increasing the value of your investment by 20%, making it $12,000. Before making this decision, consider your income structure. If you're a salaried individual, SIP is often the better choice. But if you're a freelancer or earn income project by project, the lump sum investment may suit you better. However, this doesn't mean that salaried individuals can't opt for a lump sum or that freelancers can't benefit from SIP. With SIP, you can start gradually, and with a lump sum, you can invest in windfalls or bonuses. Regardless of whether the market is rising or falling, SIP often shines as a superior choice for long-term investments. Its flexibility to start with even a small amount and the resilience it offers against market fluctuations make it an attractive option for many investors.